quite minimal criteria for buy-to-let property. With some lenders there are minimum income requirements. Generally that minimum would be 25,000, however the majority of lenders actually don't have a minimum income requirement. So minimum income isn't necessarily an issue. I'd say deposit is probably the key bit of criteria. Your deposit, you're generally looking at least 25% deposit. Can be less, can be higher, it would depend on the property itself, but generally 25% is a good place to aim. In terms of other criteria, quite a lot of lenders would require you to be an owner-occupier yourself, so own your own home, but again, there's exceptions to that. There's lenders that will do it if you don't own your own home, and there's even some lenders that will do it for first-time buyers, first-time landlords. In some occasions, people are under the impression that their income is actually going to be the deciding factor on how much they can borrow on a buy-to-let property. However, this isn't the case. The case is actually the rental income. The rental income will be the one that determines the amount that you can borrow. There's a calculation that the lender will run in the background. This is known as the ICR calculation. This can differ from lender to lender. The calculation can differ from whether you're a lower or a higher rate taxpayer, whether you're buying as an individual or in a limited company, and also dependent on the fixed rate term that you're going for. For example, a fixed rate up to 5 years might be one calculation, and a fixed rate from 5 years onward could be another calculation. So it's incredibly important to definitely speak to a broker just to work that out. Landlords don't necessarily have to have had a buy-to-let previously to be eligible for the most competitive rates on the market. The only caveat to that I would say is that you do ideally need to be an owner-occupier. That would definitely open up the lower interest rates. I would say also income can be a consideration, a minimum income. I'd say for some of the cheaper lenders in the market, there's one that springs to mind, and they would have a minimum income requirement of 25,000 and would require you to be an owner-occupier. But again, there are exceptions to that, and there's still some really good deals to be had, even if you haven't got a property already. Having a clear or clean credit history is definitely going to benefit the applicant, because it is going to mean that they're going to be eligible for the better interest rates. Having some adverse credit or some historical adverse credit is not necessarily the end of the world. There are still lenders out there that do have a tolerance for adverse credit. Depending on how recent and how significant that is, could depend on the rate and also maybe determine the loan to value that you may have, but generally there is an option out there for everybody.